So Matt, again, transitioning to the CPI report, but I'm really just using it as like a talking point to ask you some other more questions about the market. Again, 3.2% before seasonal adjustments. So from a buyer's perspective, though, again, so the 10-year Treasury, went from, we almost basically we brushed 5%. Now we're under 4.5%. I think the consensus, talking to most other people in the market, that the 10-year Treasury, the 10-year at 5% really sunk a lot of deals. There weren't a whole lot of deals that were making sense at that level. This cap rates just, again, people aren't just necessarily changing their price because interest rates move up in one day, although, it certainly affects things. Yeah. And also not to lose track, but for everyone that says that interest rates and cap rates aren't correlated, watch what happens in a negotiation when interest rates move and the price changes. Yeah. So I don't know, no, again, is there a long-term correlation? Is it perfect? No, but I see more deals move because interest rates move more than anything.
Totally.
But Matt, are people now is it an environment now with the 10-year coming down below 4.5%? Are deals starting to make sense? Because it seems like cap rates have been rising. Are we getting closer to an environment where we can make sense on the buy side?
I think we're getting closer. Talking to Addison on, who's part of like the acquisitions team, he's noticed, a lot more deals coming to the market. But I
have heard him say he says usually, this time of year, usually things slow down. So you're getting ready to go into the holidays. A lot of brokers, will say, hey, let's hold off and bring this deal to the market, but let's wait till end of January. We'll roll it out at, NMHC, National Family Housing Council, annual meeting. But he's saying, what we're seeing on the market is just a ton of deals, more than we usually see this time of year. Yeah. And it has to be that, people are getting a little bit desperate and they're floating their deals. There's a maturity that's coming up in the next 12 months and they don't want to wait. And they're just trying to see if there's any offers. Yeah. But not a lot of offers that are coming in anywhere close. I mean, the last deal that we looked at, I think we were almost $10 million, at our price below what they were asking for. Yeah. 30% below.
It is interesting because I was always, I was thinking like, what is it going to take and what is it going to look like for prices to really adjust to the interest rate environment, for the market to adjust to what the Urban Land Institute calls the Great Reset. Yeah. And it looks like we're in phase one, and phase one is call it extended pretend, call it accommodations, or call it what you will, but the real effect is like this is a lending thing. Now we're dealing with lending, or people trying to solve it in the debt markets, and if that follows through, or once that kind of processes through, whether they can get help or not, then it's going to be in the sales market. So it's interesting that we've seen these phases of like, well, now let's try to solve it with debt, and if we can't, we're going to solve it with a sale. Yeah. So maybe the sales might pop up, at the end of Q1 or something once people start realizing what debt problem they have that can't be solved without getting new lending. Yeah.
So I guess any other thoughts on CPI?
Yes.
What do you think?
I did want to note that one thing to note is, everyone says that CPI was driven by shelter, and shelter was a big component, and rent hasn't come down as much. It's really stayed at 0.5% month over month for the past few months, which equates to like a 6% annual inflation, or a little more if you kind of compound that. But still, it's been fairly steady and elevated. Still, rent has not had that decline that we predicted, but it should be coming. If gravity and math and all the fundamental forces of the universe are correct, then it should be coming, because we have seen that so much in the market.
Matt, do you know? And then you can tell me to edit this out. What the difference between rent of shelter and rent of primary residence is?
Rent of primary residence is more like apartments, and rent of shelter could be like vacation homes or something like that.
Okay, because I know rent of primary residence, or it's the equivalent. Rent is like the metric that we typically use as kind of the proxy to kind of market rates. But I was curious about this rent of shelter because it is down about half from it was the previous month. Yeah, and a month over month growth of 0.3. And in shelter overall, which does make up, you see here, 34% of the total CPI, which is why we've been tracking it. And when we have some unique insight into the housing market, it is down from last month's, growth of 0.6 down to 0.3, which is kind of tracking the prior month's growth rate. So it's not getting worse, I guess, but it's not moving as low as it could.
It's still got room to drop. And what's interesting is you can see, so you were talking about rent of shelter. So rent of primary residence is up 0.5 and lodging away from home is a negative 2.5. So all those Airbnbs maybe that got canceled or whatever it is, that equivalent for that element of rent is not doing as well.
Yeah, including hotels, motels. So that's good news.
Yeah,
it's good news.
It's a little bit cheaper.
And now this is part of the economy, especially in the hospitality that had been growing since the pandemic. Took obviously a huge hit in the pandemic. I'm curious if this is a sign of less consumer spending, consumer confidence, people maybe traveling a little bit less. Who knows?
Maybe that's a typical thing. I'd have to see what the September month is.
And maybe there's some seasonal effect as well that could be at play here.
But I also wanted to kind of put in a little bit of a context to the headline number, which was 3.2%, the year-over-year inflation number. So 3.2%. Higher than last year, and the last month for September it was 3.7, and so you see 3.2 less than 3.7. That's great, but in June it was 3.0. So it's been a little bit bumpy, and that's what everyone said. There's going to be a little bumps on the road as we go down, but still, like to kind of return to it. This stock market rally that we see, and I don't know. It may be already correcting as we speak, given how volatile markets are. But it was a bacchanalia of a rally, really, on November 14th. And I'm sure there was a good amount of bots and AI trading algorithms involved, but I see a lot of human irrationality in there. And I think that, and this is in my notes, I'm kind of repeating my argument, but like I'm trying to take this argument because doesn't lower inflation, that's got to mean lower interest rates. And I think, sure, it will, but eventually.
I was going to say eventually.
And then the last Fed meeting, Jerome and Powell's did not raise interest rates, but he didn't say anything about lowering them. And so as much as people scrutinize Jay Powell's every word and behavior, I think one of the goals of their messaging is to stay hawkish too. So they'll always err on the side of hawks. But I think that it's still 3.2 is still higher than the Fed's inflation target, and people might be looking for a 2.5% inflation target rather than a 2, because the historical average is like around 3, but I don't know what the Fed would say.
The last 10 years it was below 2, and they the Fed was dreaming of this level of inflation. Like this would have been in their mind like Goldilocks. Because if we were sub 2% growth, we get some 3% growth. There's been talk in the past that maybe the target rate should be closer to 3%, but in their mind to get to 2. If we've just had a period of 6 to 10, we need a little bit of a period below 2.
That makes a little more sense to me.
But again, it's like what's the period you're averaging? Because if you go back the last 10 years, we've had plenty of sub 2% growth. So maybe you don't need too much longer below 2%.
And I was thinking about that too. Like the historical average also includes like all that time and all the lengthy inflationary periods in like the 70s, 80s and stuff.
Yeah, exactly.
And so like the true, I don't think that the true mean is 3, but 2 seems awfully low. And I think that everyone would be happy with 2.5. But something predictable, maybe.
I think so. But I mean, the question,
and actually, we do have footage of Powell's state of mind here, and I'd love to see what he might have to say. I think that this might be in reference to the 2% inflation target.
Just close this fucking door. Close the door. U.S. inflation has come down over the past year, but remains well above.
Closing the door on.
No. I'd like so. Okay,
2% target. My colleagues.
He's talking about his 2% target.
Gratified by this progress. But we expect that the process of getting inflation sustainably down to 2% has a long way to go. The labor market remains tight, although improvements in labor supply and a gradual easing in demand continue to move it into better balance. GDP growth in the third quarter was quite strong, but like most forecasters, we expect growth to moderate in coming quarters. Of course,
it's not good.
Refusing to treat climate change like a systemic
We'll get.
risk
Thank
that
you.
you are putting us at
Thank you very much.
Wait for it.
disaster.
Thank you very much.
Wait for it.
Thank you.
Wait.
Just close this fucking door. Close the door.
Okay, so
Wow, a man of few words, but of great action. Matt, again,
Yes.
trying to look at.
I spent some time in analyzing this, and if you will indulge
what
me,
do those words mean?
So
what is it?
You can argue that Powell's comments were in reference to the interruption of his IMF talk by climate protesters. Sure, you could say that's the proximate cause.
Maybe.
But what was he talking about right before that interruption?
You think they just let those climate protesters on the stage, Matt?
I don't think
that rabbit
maybe
hole?
he didn't even notice them. He was talking about his 2% inflation target.
You just got to close the door on it?
Yeah. He said, close the door. Yeah. You think do you really think that we're gonna lower rates soon? Close the door.
Yeah.
He wants to be the hawk because, it's a better bird.
What if he had let some other Freudian slip? I mean, that just seems like it's a raw moment of him. What if he had come out and given some indication? Or you're saying that the indication has been given?
Hey, if people are already analyzing every single drop of sweat, that he gives in his talks and stuff, then I think that it's fair to say that in this angry, I don't want to even say outburst, he's just communicating he's filling his role as a communicator in this moment.